Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. Crypto last week was a bit of a mess. We had said that, we felt that taking some risk off the table in crypto made sense, given the run up it had and given that there were a few signs that things might be getting a bit more fragile, right? So we've been saying that leverage in the system was going up from the futures open interest rising. The perpetual funding rates had been going positive, which was showing that leverage was being used to be long. We had kind of got to that key level around 52, 53K in price that we hadn't broken yet. So a few things, and then skew in the options market was moving towards puts, showing that people were potentially trying to hedge out a short-term correction that they foresaw could happen, right? So now I didn't expect it to happen quite so violently and so quickly, but we definitely saw a very violent intraday move and a lot of risk getting flushed out last week, right? So we had this flash crash. We went from 53 down to 43,000, which is an 18% intraday sell-off. It then did bounce and recover and settle in that 46 area by the end of the day. In Ethereum, we had similar. It fell harder. It fell about 24% intraday. Bounced off this key 3,000 level and then kind of settled around those sort of 3,400 area, basically, right? So that's what you saw in the two sort of large cap cryptos. Now we did see some buyers step in buying sort of large quantities of coins on that crash. Apparently MicroStrategy also stepped in and bought another clip, but that guy's got endless appetite to buy Bitcoin, it seems. Now, the perpetual funding rates did normalize. Yeah, so if I bring up this chart, you can see here, this chart kind of shows you for various exchanges what the 1 week funding looked like, annualized yield on the 1 week futures. And it got pretty high, right? It got to like 20% or so if you annualize it. And then after that flush out, you saw it got as low as nearly -10 and then settled in closer to zero again, basically, right? So that's telling you that froth, that speculative activity within the futures market has been cleaned out somewhat, which leaves the market maybe a bit less fragile, okay? You've also got a nice chart here, courtesy of the on-chain metrics at Glassnode. I'll bring this one up. So this shows you kind of liquidations within crypto, and you can see in that run up in Bitcoin that we had to those local highs, you're seeing this line at the bottom going red is basically shorts getting liquidated, right? So futures short positions getting liquidated, and then suddenly as it swings up as the market drops down, you get a bunch of longs getting liquidated. Right. So, and the same thing happened in Ethereum and, even more violently, basically. Right. So you're seeing a lot of futures participants getting liquidated from these wild swings within the market, basically. Right. So what that basically shows you is not a lot of fun for short-term traders trading futures when you're just getting wiped out left, right, and center. And it kind of shows you why option volumes, which is the graphs at the bottom, options volumes have been increasing, whilst not exploding back to the levels we saw sort of earlier in the year. Options volumes have been increasing because it's a lot easier to play these sort of swings in crypto when you've got the safety of option premium, basically. Yeah. So that's kind of the story of last week, right? And really what was dominating, what was going on. If you look at what else has been happening, well, obviously you had Bitcoin yesterday have some pretty crazy price action. And that was because of the Litecoin news or fake news that came out. So Litecoin, but if I go into the shorter term chart, where are we? You can see here, you go to like the 15-minute chart. There you saw Bitcoin go from 45,000 spike up to 40, so 2,000 point spike within, minutes. And then the news got debunked basically that it was fake, and then it came all the way back down, actually overshot a bit, went down. Again, probably people had bought that piece of news and then being forced to dump it. And now the market's actually recovered quite nicely, right? Back to those local highs, even without that news flow. So that's quite good that we've digested that noise, and now we're kind of rallying again, basically, right? But the news was that Walmart and Litecoin have partnered, and they're going to start accepting payments in Litecoin. Market got all excited about more adoption in crypto, et cetera, et cetera. But like I say, it was completely reversed within minutes when it was debunked. Yeah. But it's not ideal, right? When you see that type of stuff moving crypto markets by such a large degree, because it basically makes people who aren't already in the space get nervous about the space. Say it can just get moved around by random tweets and headlines, which it can do. But I guess you just need to think of it in the context of the volatility of the asset. 2,000 points isn't that much, right? It's like saying you can still get news, fake news that drops, that moves the S&P by 50 basis points. No one thinks anything of it, right? You just need to multiply that by a factor of 10, and you get the noise on Bitcoin, basically, right? So a 50 basis point move on S&P, no one really looks at. Same, you just think of a 2,000 point move on Bitcoin as kind of the same sort of thing. If you think about it like that, then you don't really get scared by that noise and that volatility, basically. Yeah. Okay. The other on-chain stuff that's probably interesting is the hodl waves, and what have the long-term holders been doing? Did their activity change or anything like that after the recent price action? That's a resounding no. So you see this nice sort of rainbow chart that they like putting on Glassnode. I quite like this one. It's got the price action of Bitcoin, but it's also got the kind of different age coins and what's been going on. And you can see that there was no spike in the kind of younger coins there, basically, right? So the older coins that have been holding Bitcoin for a long period of time are still dominant. They're doing nothing. They're not perturbed by the recent price action, basically. And that's what those hodl waves are kind of trying to signify. Okay. And then the last thing to kind of know, which I don't really have a chart up for, is the liquid supply. So that's kind of what goes on exchanges and things like that, right? So the liquid supply has not increased, which means that people are still happy to keep their coins off exchange, which is showing little urgency to get rid of those coins should market prices go lower. If you're concerned about market prices going lower and you want to get out and you want to stop out of your holdings, you're going to be moving them to exchanges ahead of time, ready to get rid if you need to get rid, basically, right? We've seen none of that in the recent drawdown, which tells you that people are very comfortable with keeping their coins off exchange, which means they've got those coins for the long term. And so that's actually very supportive for the longer term price dynamics within Bitcoin. Yeah. So market feels pretty well supported, given that the speculative leverage length has come out through the liquidations that happened last week, and the hodl kind of mentality seems completely unconcerned and changed from the recent price action. Okay. And then now let's move on to the vol analytics, see if the vol space is telling us anything. Okay. So you had obviously realized vol, you had a bit of an uptick. Right? Should be no surprise to anyone when you do an 18% intraday move. That is the definition of realized volatility. Okay. So if we go to Bitcoin vol, we can bring up the chart of realized vol, what it's been doing. You can see I like looking at kind of the realized versus implied chart here. So you had realized tracking around 40, implied's up there at 70, 75. You had this massive pop, realized just catching up to that implied, right? So it's kind of saying that the premium in implied vol was justified, and realized vol then came to catch up, basically, right? So, you know, all those people who've been holding optionality in Bitcoin at a premium to realize got vindicated by that sudden movement, basically, and they would have been able to take profit or monetize some of that movement, right? However, if we look at 30-day, whilst you got a pop from 50 to 60, you still got a massive spread between 30-day realized and 30-day implied of about 20 vol points, okay? So it's still risk premium in that volatility surface, people still paying a bit above the odds to own optionality, but given the choppiness of the price action, we can understand why they're doing that, right? You want the safety that options give you when you're speculating. You don't want to get stopped out by these wild futures gyrations, basically, okay? So that's kind of what realized vol is showing us. Now, term structure wise, we didn't get massive move from week on week, right? So you look at the week on week term structure, it's practically the same curve. Looks no different. Still got a steep contango, front end trading at 70, back end trading more like 90, quite steep, right? Now, intra-week, when we had that drop, you definitely got a pop in the front end, right? So you got a pop into the mid 80s in the front end, where, you know, the weekly stuff, the 1-2 week stuff was trading up here. So it was a much flatter curve. I was able to take advantage of that. Those of you who are subscribers, part of my community, saw the trades that I was doing, calendar trades, taking advantage of that, selling that front end vol and earning carry in a safe way by positioning it to the upside. I won't go into any more detail what that trade was on here, but you know, that was a successful trade that I've been able to monetize for those who are following along on the spreadsheet of trades and kind of what I've been up to there. Yeah, I have done some restructuring on those trades. So, you know, how do I restructure those trades? Well, I've basically covered the 17th of September stuff that I was short because that went to pretty much zero. I reduced some of my October longs that I was running against it. And then I've sold some next week, not 17th, but 24th of September calls against it. So I've kind of restructured the position, monetizing the short legs, and then leaving it as a bit of a call calendar position, 1 by 1, so not ratioed this time, with the idea that even if Bitcoin starts to climb back higher, I don't think we're going to breach 54,000 by 24th of September. And then I'll just be able to just be long my 60K calls in October, and I would have funded all of the premium of those, and there'll be a bit of a free option on a bit of a rally in October, which is kind of what I'm starting to think timing wise. I think we're going to go through a bit of a consolidation for the rest of this month. And then if we're going to have a break higher of any meaningful size, it will come in October, basically, right? And that's kind of how I'm reading the price action and how I'm trying to position within the options. Yeah. And then skew, last sort of thing to have a look at. It's quite interesting. So if I add all the maturities on this graph, what I'm seeing is a divergence in skew. Okay. So whilst last week you had, you know, all of those kind of lines kind of starting to crunch together a bit. So you saw, you know, really short dated skew was 4 vol points for the puts, but then for really longer dated, like 1 year stuff, was 4 vols over for the calls. Okay, so that was kind of compressing. Now, as the weeks played out, you've got the short dated stuff way more expensive. Okay. So you've got the shorter dated stuff like 8 or 9 vols for the puts, but then the longer dated stuff is 8 or 9 vols for the calls. So you're getting a dispersion of skew where short dated skew is remaining for puts as people are like not completely convinced we're out of the woods yet on the correction and are in need of downside protection for whatever this final sort of correction is going to play out to be. Whilst on a longer term perspective, people are happy to own longer dated calls because they think that's where the opportunity lies, and they're willing to pay a premium for those longer dated calls, basically. Right? So that's what the dispersion of that skew is kind of saying, basically. I found that quite interesting. And then in terms of the flows that we kind of saw, whilst the volumes definitely have dropped off a bit, in options, you've basically seen buyers of calls stepping in October, sort of midweek last week after we had the bounce, obviously, and the stabilization around 45. You started to see October call buyers come in the 70,000 to 80,000 area, and they bought a reasonable chunk. About $500 million of notional was bought, so middle of last week. And then you're also kind of, in terms of Ethereum, where you're seeing the flows there, or certainly where people are holding some of their Ethereum exposure via optionality. A nice chart out by Genesis Vol was basically this one, which kind of shows you that the open interest in Ethereum definitely residing in calls, right? And then the maturity of choice is the 31st of December. And you can look at the strikes and you see you've got some at 4,000 and a larger chunk at 5,000 there, basically, right? So the 5,000 strike in December seems to be a bit of a trade of choice, and is creating a premium in that, creating a bit of a kink in that Ethereum term structure, basically, right? So arguably it's too expensive because that's where a lot of people have bought. So if you're a call seller, if you're an overwriter, then selling those calls is a nice trade. It gives you like an annualized return of like 50% selling those calls. That's how expensive they are, basically, right? My personal preference right now in Ethereum, if I quickly go into what I've been doing with Ethereum, I had traded a put ladder in Ethereum to play a pullback in the market. That's actually played out pretty nicely. You know, touch wood, it's not over yet, but if I bring up the chart, let me bring up the Ethereum chart here, as you can see. So, you know, I'd said, you know, my target was kind of 4,000. I started getting out of a load of calls up there, was looking to the downside, looking for a pullback, had seen a few sell signals that made me think we were going to settle back down into the mid 3,000s. I did not expect a flash crash to touch 3,000, right? Otherwise I would not have been doing put ladders, obviously. Thankfully, you know, I was able to hold on to my put ladder and not get stopped out or do anything like that. That was because of the sizing was appropriate. And also because I had managed to sell some futures up there at 3,800, 3,850 area. And I managed to cover those in the mid 3,000. So that kind of helped cushion some of the P&L pain of that put ladder, basically allowed me to hold it for longer. So I've been holding that put ladder. It's been decaying away nicely, paid about $25 for it. Today, I believe it's worth about 80 to 100. So it's doing pretty well. It's done 3 times its money. But obviously, it can, if we settle between 33 and 36, that put ladder, which was of the strikes 38, 36, 33, that put ladder is going to make 200 points if we stay there. Now, I've done some risk management stuff around it, which I won't go into. Obviously, people who are part of the group have followed me along there in Telegram and in the spreadsheet that I send out. I've done some risk management trades to kind of push those break evens down a bit and manage my risk, because I wasn't 100% confident that we weren't just going to collapse through 3,000 again. So there's things that you can do, but the point of that trade was to earn carry, and it's doing that, and it's doing that well, basically. Now, once we come to the end of this week, some of that money that I've made, assuming I get to keep it, I'm probably going to reinvest it into upside structures in Ethereum. And my upside structures of choice in Ethereum are going to be looking at, you know, October and November expiries, looking for a break back above 4,000, maybe targeting 5,000 or beyond. And I will be looking at the surface, and I will probably be doing some sort of call spread or call ratio structures that give me a positive delta, that give me a nice carry, not bleeding too fast, and can give me leverage to my premium of at least 5x, basically, right? Those will be the type of structures I'm looking for. But watch this space. Once I decide exactly what trade I've done, and once I put it on, I'll share it on these calls, and we can discuss it in any greater detail if you guys want to. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.